Hello again, I'm Rob Smith of the In the Black Quant Edge VTF here, T3 Live, with the Quant Edge 4-week coaching program. Week 2, video number 3 in the series on time frame continuity. So peruse, once again, the disclaimer. So we began with actionable signals, and so when you review those videos, go through the charts, you're going to see these setups all over the place. Right? You're going to see inside bars, you're going to see them break, you're going to see the rev strats, you can see the 1 bars, the 2 bars, all that stuff. Go through the charts so you can see those as quickly as possible. You should be able to see them everywhere. And then as we get to continue to add time frame continuity and the third universal truth of the broadening formations, those should be very clear, and the examples should be very clear. So keep those in mind as we get to time frame continuity. Remember, we went through the participation groups, right? The major groups, monthly group, weekly group, daily group, 60 group. All right, that those universal truths of those opening prices can't be disputed for direction. We talked about the 4 C's of continuity. We always want to be able to identify what groups are in control of the direction of the price. We want to see, are all of these confirming to give us full time frame continuity to the upside or full time frame continuity to the downside. And if they're not, they're in conflict. So we want to be aware of conflict, because then we have to revert to control, who is in control. And then we have to look at all these levels to see if things are going to change, right? We know that 2 of the 4 major time frames are going to change every day, right? Because the 60 and the daily are going to open. And we also want to look for the actionable signals. Are they going to cause the time frame continuity to change, or are they going to confirm, or do they conflict? All these things are going to be important. Talked about the importance of the uncoupling, right? So we can identify the 4 major groups, right? We can't do that until they uncouple. Talked about the importance of event continuity. When an event comes out, that's another level. That's another price that we want to know about for the rest of that day. So we're going to continue to combine the actionable signals of time frame continuity. And we can use identifying the natural buyers and sellers in pure conflict with their broader averages or sectors, right? Because there has to be. And so for today, what we want to do is go back to the live charts. Look at the events that have happened recently and how all of this ties in, and what we did and what we're going to see in the future is how we put all this stuff together. So you're going to take all these concepts, and I'm going to show you how they've worked in the past, and then we're going to continue to move forward. So on that note, let's look at live charts. So if we start off with the Dow Jones Diamonds, we're looking for Dow 20,000. How's it going to get to Dow 20,000? And what was the setup coming in? Setup coming in last week. Inside bar, countered with the hammer. Inside here. Rev strat setup on the weekly. If we go to the SPY, inside week. All right. At the time, both monthlies were green. Both monthlies were green at that time. So we came in on Monday. What happened? Tried to go down, comes back and hammers. Dow Jones Diamond hammered on Monday. SPY did this. SPY went down, somewhat of a hammer, but took all these lows out, but then came back out. So we come in Tuesday. All right. What do we know about Tuesday? We talked about the turnaround Tuesday phenomenon. Right? And that's going to be caused by rev strats and inside days and actionable signals that didn't trigger to the downside on the soft Monday, and the Monday coming in, triggering back to the upside on Tuesday, which is what we got. So if we go back to the diamonds, not only were the monthlies still higher on both of those, hammer triggers here, which then, because this was a Monday, this was the weekly continuity level. So it opens, changes the week to full time frame continuity to the upside here, gets the actionable signal on the daily here at 198.11, takes out the weekly rev strat at 198.65. Boom, boom. right? And the SPY had taken the 1 bar ref strat because it had taken the inside week to the downside, but had reclaimed it. So when the SPY opens here above that Monday opening, suddenly the weekly changes back here to full time frame continuity to the upside. If we take a look in the diamonds, in the Dow Jones 30 itself, UNH goes down, hammers on Monday off an inside bar. Rev strat. Stop them out, stop them out, stop them out, stop them out. Boom, took them all. DuPont. Rev strat day on Monday. Tuesday confirms the rev strat. That helped the Dow. If you go to the weeklies, then all these started to trigger. Cisco, inside week and up, full time frame counter to the upside. We had Microsoft, inside week and up, full time frame counter to the upside. Visa, inside week measured move, up, sideways, measured move, inside week to the upside. All these things were going at the same time. That's what we're looking for. The simultaneous break, turn around Tuesday, to get the dailies to trigger the weeklies. Right? Just like we've been talking about. Cat Tractor, weekly momentum hammer, all that stuff kicked in with full time frame continuity to the upside. So at that point, we also look for the broader average to confirm, and then we look for those combinations, right? Not only with the actionable signals and time frame continuity, but for the simultaneous break of the diamonds to help the other broader average. So diamonds broke first, but when we go back to the SPY, what can we do is once we know that the diamonds are rev stratting and everything's reconfirming their signals to the upside, once the SPY starts getting close to the 1 bar rev strat up in here, we can look for additional actionable signals to trigger here as a combination. So in this case, here it was. SPY goes inside 30. Here. Momentum hammer here. All this stuff, and you could look at a lot of shorter terms, fives, anything to get in there. But we had every reason to believe that was working. Everything's triggering to the upside, full time frame counter to the upside. The diamonds have already rev stratted. There's no reason to believe that the SPY wasn't. And it did, and then it eventually gapped up higher. Conversely, when we talk about watching the natural buyers and sellers, if you were simply watching the Dow Jones, you would have known where to be on the sell side. Walmart, rev strat month to the downside. Here, inside month, countered with shooting star, down. Last week, today's Monday, out of the 4 days here, it was up Tuesday, that was it. Right? And this was the weekly opening. So anytime here, below here, and then certainly here, full time frame continuity to the downside whenever that 60 was red below that level. So you could see there's sellers in Walmart. There was last week, there were sellers in Walmart. There's no question about it. Everything else is going up. The broader averages, the Dow Jones Diamonds, which this is a component of, was going up full time frame continuity to the upside with actionable signals. This had full throttle downside with a major actionable signal. There has to be sellers in there, so we could identify that. So a good way to go after that and hedge your longs, if you will, right? If we go to the Brexit, and you'll recall the Brexit started with the pound. So if we go back to the Brexit and pull this out a bit, the pound and the SPY, as a matter of fact, they were up in front of the Brexit because they figured they were going to remain. That's not what happened, right? So it went up first, and then overnight it went inside in the 60 up here. Now, you're not going to see it on this chart. We don't have that data back right now. Trust me, it did. I tweeted it out when it happened. And what happened was that triggered the inside 60 down as the Brexit took hold, took the United States futures down, limit down. Big time. Puke. Right? And so as we come in the next morning, remember, everything matters when it occurs. If we go to the SPY, you may recall the Brexit was on a Thursday night. Thursday we went out near the highs, figuring they were going to remain. Then overnight, started to pop up inside 60 with the pound. Brexit, puke. By the time we open, All right, we're back down into here. All right, so it's a Thursday, so these 4 days, so this is with a Monday, changes the continuity back to the downside, right, getting clobbered. Right out the chute, so as soon as it started to pop up, the daily and the 60 were in control. No question about it. They were against the week, but they were in control. However, the higher level of probability is going after things that could stay full time frame continuity to the upside. Anybody could do that. We want to know about, because anybody who's short got what they wanted. They got the Brexit. The market's falling apart. But if their stock's not going down, they have to cover. They got buyers in there. At that point, that was XLU. The utilities, which went inside month and up during the Brexit. Here, full time frame continuity to the upside, right out the chute. So immediately we wanted to go there. There were other trades while the S&P 60 and daily were in control on that upside, but immediately the utilities, they went straight up. So then, amongst other long trades, while this was in control, it went inside 60 here. You can't see it. Trust me, it did. It went inside 60 here, and then collapsed all the way back down to the lows. So at this point, after this huge rally, once it went inside 60 and started to drop, all right, that gave us an actionable signal and the 60 in control to the downside. Immediately, we want to go back to see who still has full time frame continuity to the downside. SPY's nowhere near it. It's got to go all the way down to here. It eventually did it, but at that point, it wasn't. What we want is things that, when the 60 goes down, to trigger things that have full time frame continuity to the downside. So at that point, price line went up a little bit on that rally, but by the time that 60 failed, it was already back down through here. Boom, price line got murdered. Absolutely slaughtered. If we go to VMW, VMW was kicking pattern daily to the downside. All right, it was a Thursday, Wednesday, Tuesday, Monday. Right here, your weekly opening. Boom, changes the week. Full throttle downside on that huge rally in the SPY. Could only muster this. When that thing turned around, there was no way this thing was going up, right? No way. Perfect. So then, what did that do for SPY? Price line, I love that chart. What did that do for SPY? So SPY comes all the way back down and forms what? Momentum shooting star. When? On a Friday. All right? So you come in Monday morning. Monday morning, gap down, shooting star momentum, destruction. All right? Everything's getting blown out. Full throttle downside, full time frame continuity to the downside all day pretty much. Right? Outside of maybe 60 down here. But everything's just got destroyed on a Monday. Then you come in Tuesday, anybody who held overnight, because they can, everything's going down, all time frames are down, going out, towards the lows. But the next morning, SPY gap's here, right? Kicking pattern upside. What did that do? That changed the time frame continuity of the weekly back green on a Tuesday. All right, so you had the 60 daily weekly now going back up. All right, these guys are screwed. Had spent all day covering. The question at that point was, now can they roll back down? As the Brexit, is this the Brexit bounce and they roll back down like many had thought? This is where we continue to look through the major sectors. So if you looked at this day here, and you go to the transports stayed inside day, not strong enough to change the week. If you go to small cap, inside day, not strong enough to take the week. You come in Wednesday, inside day, triggers to the upside, changes weekly continuity back to the upside in the small cap. Inside day up in the trannies, changes weekly continuity back to the upside. SPY, rip, already stronger, gaps, and just rips, right? And so we want to continually watch how all these things are going to tie in together, right? And it makes sense. It's a sequence. Who's strong, who's weak, when, why, using actionable signals and time frame continuity. So if we go back to the election, Mr. Trump, go back just a little bit further. Down in here, all right, it was already up in front of the election. They thought Hillary was going to win. What happened here overnight went limit down again, took everything to the downside. However, by the time we opened in the morning, this was still the weekly opening. It was already positive when it started ripping like this. All right, you go to the weekly. Here, it was already threatening kicking pattern. Right? It was already doing it. It just kept going. Then you go to small cap. Hello, Mr. Trump. Boom, kicker, ripper, and back into full time frame continuity to the upside. So all these things you're going to continually see going forward. Things will confirm or negate. Things will change. So you always want to think of those 4 C's and in terms of time frame continuity and actionable signals. What will all this stuff do? Right? We talk about what will things create. Right? So last week, if you look at CVS here, the CVS weekly was a weekly shooting star last week. Right? And we're coming into so that hit. Right? That what it did was negate, conflict the inside month and up, and if that works, right, what that's doing is potentially creating that rev strat month back to the downside. Multi-bar setup couldn't get outside of here. All right, so all that kind of stuff matters. We want to keep staying on that. So when we come in this week, we also want to know how much time do we have on these signals. All right, so the monthly signal ends at the end of the month. It's over and then the new one begins. Same with the 60-minute setup. A 60-minute rev strat is over. Once that rev strat is complete, it's over. So this week is a little difficult because we're coming into an exhaustion. We are changing months mid-month, right? The good part about that is it means we uncouple faster, right? We'll uncouple the day after the monthly change. So as we come into this week, we can look at combinations. All right. All right. And say who's an inside day. All right. With the inside month to the upside. We only got a day left. That's the problem. FCX is. So for the last day of the month, we can go inside day, combination with the month. All right. ARIA, so we can take a look. So FCX is still inside month to the upside. And an inside day to see if it wants to at least finish off. It's also in the XME. So for tomorrow, XME is a rev strat to the upside. So maybe it finishes off nicely, but come the following day, it's not inside month and up anymore. Right? New signals got to evolve. Right? That's a problem. So here you can see the inside day here. Going to the upside. See, when you look at these charts, you just want to keep looking for things that we're talking about, and you'll see them all over the place. So at this point, we have that monthly exhaustion, and so all we'll have is weeklies in force. Right? Come Wednesday, all we're going to have is weeklies in force, and then new monthlies, new dailies, and new 60s. Right? Can make it very interesting. Right? So you always want to be aware of all of this stuff. Right? These things are very visual. You can see them very clearly. All right, you can see red and green, or if you can't, you can see black and white. Knowing where these levels are, because we're looking at the 4 charts at least every time. And another thing you can do is here's Monday. All right, so here's the Monday opening today. And if you like on your charts, what you can do, you can draw a line like that to remind you where the weekly opening is, in case you don't have your weekly chart up at the same time. And you'll know for the rest of that week, that's a level you want to know about. So the great thing about taking our time in this course is that You have the videos to go back and review. And then anything that's less clear to you or you want to see more of, we talk on Wednesday and we talk on Friday. And that's how we can see how these things that we discussed played out. We discussed before it happened the rev strat for going into Dow 20,000, all these things we discussed before. And then Wednesday we can say, here's how it's going. And then this is going to be interesting because Wednesday we're going to have the new month and stuff like that. So that's the good part. So you can take your time. You've got the table of contents. You've got the videos, so you can go right back to where you need to be. Right? But certainly make sure that you can identify the actionable signals. You're going to want to be able to visualize what they will create when they do go off. Right? And we'll take it from there. All right. That's going to conclude this video on time frame continuity. And I will see you on Wednesday afternoon. All right. I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live with the coaching program, 4-week coaching program, week 2, video 3, time frame continuity.